Morning, Steve Free in Chicago with the morning grain comments. Well, yesterday the market was kind of surprised when a lot of financial and the soybean oil market was sharply lower on concerns that the SARS virus was spreading out of Asia, and there was one case here in the United States in the state of Washington. I think overnight the market's kind of settled down a little bit. Stocks are opening up higher on the talk that China has a plan to control the spread of SARS, and still looking to see if there's any vaccine for it. We also yesterday heard some rumors floating around that before Saturday's China holiday, they might actually offer some import quotas for certain U.S. ag goods. And so that's kind of helping the market too. We continue to see wheat prices move higher. Continues to be the three main themes. Number one today is that French protests continue to snarl logistics and moving wheat to the exports. Algeria was tendering for wheat overnight. Instead of buying the cheapest wheat, which is French wheat, they did option origin. And so we'll see how that impacts exports. Number two, again, Russia has changed the way that they are selling wheat for export. And so that might reduce the actual exports from what the USDA is saying. And also, this is slowing down farmers' sellings, making not as much wheat available at the port for Russia to be competitive. And then finally, I think that there's still a glimmer of hope that China might come in and buy U.S. wheat. Again, if they buy it, it might be Kansas City wheat. And we really don't have a lot of free wheat to sell at this point. So we're approaching March Chicago wheat $6. We would recommend, if you have some inventory wheat, that you sell out at these prices. And as the July contract of Chicago wheat approaches $6, we'd also suggest selling some cash wheat. Assuming that we have normal crops in 2020 in the Northern Hemisphere, there may be too much supply for the demand, and if the French protests is resolved, if China doesn't buy U.S. wheat, prices are too high. As far as the corn is concerned, funds are still short corn, and corn is struggling to move closer to that $3.92 area and even $4. And so some people feel that if we trade over $3.92 on the March, we might see $4 or maybe even $4.02, which is a technical objective. Again, farmers have not been good sellers of corn, but they could begin to sell corn once we get to March at $4. Same thing for new crop. Farmers are not sellers of new crop, even though there's talk about them increasing production. Weather-wise, down in South America, it's raining too much in northern Brazil. It's not raining enough in southern Brazil or Argentina. We're not sure if that's going to be a trend. Our weather guy isn't too concerned about it, but he's going to continue to watch it. So overnight, we've got beans up 3 cents, corn up 2, wheat up 9. I think it's a combination of maybe a little less concerned about SARS. Maybe China might come in and buy some U.S. ag goods before their holiday on Saturday, and the French protests continues to limit exports out of France. Funds right now, we estimate, are long 40,000 wheat, short about 100,000 corn, and short about 15,000 beans. They continue to be long 99,000 soybean oil. So again, a little bit better tone in the grains and the stocks, and these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.